I think there are many challenges when we look at the trade discussions and the discussions on currency strength or weakness. This is obviously more than just about supply and demand overnight. There obviously are political factors at play here as the rhetoric heats up between China and the U.S. But I think in general over the medium term, we do expect, given what the U.S. has done to its own rates, for the U.S. dollar to gradually weaken. So we would not expect one strength we would not expect U.S. dollar strength to last for too long. And we still expect things to be largely range-bound. We're not expecting too much fireworks on the currency side, because that would destabilize the very sensitive trade talks underway.
Okay, switching gears completely, I want to get your views in on gold. You are expecting 1,800 on gold by when?
First, we've got to get the direction right in terms of the actual timing. Of course, that's not clear. But we've been gold bulls for a very long time. We've been encouraging our clients to allocate to gold for the last few years at least. A lot of this is driven by what's effectively you could see as unintentional competitive currency devaluation. The fact that central banks around the world have cut interest rates to zero, that QE is ramped up with a passion, fiscal discipline is going through. The supply of currencies globally, of fiat currencies globally, simply is going to mean that something with limited supply, such as gold, is likely to move up. So that, although we don't necessarily deliberate competitive currency devaluation, that is the net result of what we're seeing from central banks and governments at the moment, and gold is going to be the likely obvious beneficiary of that, and especially with the real interest rates also at zero or close to zero. So in terms of the exact timing, of course, that's very challenging, but we definitely see the upward trend towards those levels.